On today's episode, we'll be discussing IRS Code 1031 tax-deferred like-kind exchanges and how property owners can use Section 1031 to get what is essentially an interest-free, no-term loan from the IRS on the taxes that would have been due on the sale of that property. Welcome to the Pink Door Podcast. I'm Jim Alden, and I'm joined by Tim Veen. Tim is a real estate attorney located on Plain Street in Marshfield. And in addition to being a real estate attorney, Tim is a prominent real estate instructor in Massachusetts, and he conducts regular online training to make sure the real estate agents like me are able to keep current with their continuing education and receive up-to-date information about all things real estate. Tim, thanks for agreeing to be on the podcast today.
My pleasure, Jim. Happy to be on, and thanks for inviting me.
My pleasure. With the increase in property values in the last 10 years or so, somebody buys a piece of property for 50 grand and now it's worth maybe $600,000 and they want to sell it for various reasons. One thing that would normally happen is it'd be open to capital gains on that. So tell us, 1031, how does that all fit in?
Well, what you started out describing certainly is something that a lot of homeowners are facing, particularly people who have been in their home for a long, long time. And the example I give would be if someone who purchased, say, a house down here on the South Shore in Braintree back in 1989 for $250,000, and then they go to list it now and find out, lo and behold, they can sell it for $950. Well, that's a nice little profit that they've made over the years. And ordinarily, when someone makes a profit on an investment of, it could be any type of investment of one of several classes. It could be real estate. It could be stocks and bonds. It could be really any type of property held for investment. The government likes to get paid on those profits because it's a form of income. And fortunately for homeowners, the government allows what's called a primary residence exclusion to capital gains taxes. And so for individuals, that's $250,000 exclusion from the gain. For married couples, jointly held owners, it's up to $500,000 exclusion on the capital gain. So most people are going to get that beautiful big exclusion when they go to sell their property and won't get taxed on most of the profit that they make on their home. However, for other types of property, particularly investment properties and properties held for business, those types of properties, the government likes to get paid and is going to get paid every penny of the capital gains when the investor turns around and sells the property. And so 1031, Section 1031 of the Internal Revenue Code allows an investor to defer this capital gains tax as long as the investor takes the proceeds from the sold property and then applies them to the purchase of another investment property.
So they get to kick that can down the road.
Well, exactly. So what people need to understand is that 1031, for the most part, is a way to defer capital gains, not to avoid capital gains, because ultimately, in most cases, the government gets its money. And but as you mentioned earlier, 1031, what 1031 does by allowing investors to defer paying tax on profits from an investment property, essentially they're getting a 0% interest-free loan on their profit. So that's a good thing. And really the purpose of a lot of people say, well, isn't this just making rich people richer? And there is some truth to that to a certain extent, and what's wrong with that, right? People that are good with their money and that are smart and that have earned it deserve to get paid for it. But there's a larger and a greater good behind the principle the 1030 of Section 1031, and that is it incentivizes investors and others into the reinvestment of the real estate market instead of pulling just cash and proceeds out of the real estate market. Their 1031 encourages this money to be reinvested in the real estate market, and those types of real estate investments are a good thing because they stimulate economic growth and they also promote property ownership.
They may invest in some other area that's a little more depressed than where they currently sold.
Excellent. That's a great point, because investors are just as good as anyone at finding a deal, and very often a smart investor will find possibly a depressed area that could be an up and coming area where there has recently been maybe some type of governmental investment into local businesses, and an investor can seize on that and invest and purchase commercial or business properties in the area. So you're right. It 1031 can be used to promote economic growth in an otherwise depressed area.
Right. I was looking at online in the MLS at some houses for one of my buyers looking to get in. Some houses in Dorchester, really, really tired houses. They haven't had a coat of paint in probably 50 years, and something like that. If you took some money out of from one of your sales using the 1031, go and buy a piece of property like that and turn that area around.
It's funny you said Dorchester because I also have a buyer client who has looked at several multifamilies in Dorchester, and the same thing. They appeared on MLS to be very good deals, but then you actually visit the property, and sometimes creative photography can cover up some of those warts. But getting back to the but you're right. 1031 can be a useful tool for encouraging in investment, not just in areas that are doing well economically, but areas that are more depressed and
Right,
hopefully on their way up.
right, right. Do you see much activity going on with the 1031 in your practice?
We have we see it from time to time. It seems to come in spurts. We've done several. We had several 1031 clients this past year,
Yep.
but it's a tricky area because real estate values, and I'm talking about the residential market now, because real estate values have appreciated just so dramatically and quickly. I think it is having an impact on the 1031
I think a lot of
community.
people are panicking.
Well, yes, because it's sort of analogous to the situation where why we have an incredibly low inventory. We have a low inventory because we're in a situation where someone could sell their home in a minute, but what are they going to do about a replacement property? It could take them a year to find a replacement property. And in a situation, and by the way, if you're exchanging, say, two investment properties, say two multifamilies, we'll go back to Dorchester. If you're if you're selling one multifamily and then you're using those proceeds and buying another multifamily, then it's the same situation. You're probably gonna be able to sell that property very quickly because of the incredibly low inventory. But what are you going to do on the purchase side? And that is because it's such a competitive market. You're going to have, whether you're an investor or looking for a primary residence, you're going to have a lot of competition from other buyers in most cases to find another property. And here's where the stakes become higher than for somebody who's just looking uh, to move their primary residence. In the case of a 1031 exchange, the rules of 1031 exchanges place very strict deadlines on how long that 1031 exchange can take to consummate. So,
Okay, let's do a little scenario. I'm a
yeah,
buyer. I'm the
absolutely.
seller. I'm the seller in the scenario,
Yes.
and I have a multifamily Boston because
Yep.
Boston is full of multis.
Sure.
Um, and for various reasons, talking to my kids, I'm going to get rid of it. I'm going to
Yep.
sell it. What are the steps I have to do? What is the first thing that I need to do after I've decided that I'm going to offload this property and I have to invest in another one to take advantage of the
Yes.
1031? If this is a three family, I have to go into another investment property, correct?
You do. However, you don't have to go to it. There are no restrictions other than the replacement property only needs to be held for investment or a business purpose. So,
Okay.
and I think that's a and I'm glad you brought this up, and sorry to cut in,
Yeah,
because you don't have to
that's right.
sell a residential property, exchange a residential property for another residential property. You could sell a residential property, a residential investment property, that multifamily in Boston you were talking about, and you can use those proceeds and turn around and buy a nuclear power plant. You can buy an industrial property. You can buy a giant warehouse, or you could buy an office building in Boston if you have the means. So when they talk about like kind exchange, they're really talking about like kind, meaning that it has to be property that is held for either investment or for business purpose. In fact, for real estate, the only thing that's excluded is property held for primary residence or a vacation home. That's it. Anything else can be used. So, getting back to your example, you're selling a multifamily that you own in Boston. So,
Right.
step one for you would be, Jim, to identify a replacement property
Now,
or
if I get rid of
properties.
the multifamily, two or three family in Boston, I could thinking down the road, I can purchase a warehouse,
Correct.
or business condos,
Correct.
and to sublease those for income, right? They generate income and that go back into the
A-
family.
Absolutely. As long as the property is held for investment purposes or for a business purpose.
Investment properties. Um, so I can sell a two family that's been rented, and I can take that money and I can buy a commercial property that can be used for storage or whatever.
You can, or you could buy another. You could buy another two-family property. As you said, you could buy a warehouse. You could buy, a mobile home park. You
Yeah,
could, as long as
mobile
it's
home
an
park. That's
investment property.
interesting.
Yeah. Oh, sure. Mhm.
Okay, interesting.
The land, not the individual mobile homes, because technically those aren't real estate. But you could buy the
Right.
the land.
You can buy the
On,
park.
you could the park itself.
You can buy
Correct.
the park.
Yep.
Okay, and lease out the pads. All right. So still being the seller here, I've identified that I'm going to buy a commercial warehouse. Okay, I made that decision. What's my next step?
Sure. So,
Call you?
yeah. Well, no. Actually, before you call an attorney, you need to call uh, the the ringmaster of every 1031 exchange. Someone called whose title is a qualified intermediary, or a QI. Now,
QI.
a QI is required by the code. 1031 requires that a 1031 exchange be carried out, overseen, and managed by a qualified intermediary, this person. And so obviously this someone, and this could be an attorney who isn't approved qualified intermediary. It
But
could be
if
a
you're my real
non-attorney.
estate attorney, you wouldn't be the QI.
Great question and good point. Absolutely not. Now, I could I could serve as the QI and also your attorney, but usually those roles are separate, and it's probably a
Okay.
good idea that they be kept separate. So usually, when I represent exchangers, investors who exchange properties, I represent them in the real estate transaction, and they hire a separate qualified intermediary. So that's really what would be the first step that you would do. Step one is you would kind of get a sense. You would sort of informally identify a property that you would like to purchase. Sort of, obviously, you'd have to do your due diligence, do your homework, you'd have to run the numbers because there are very tight deadlines, and there are two important deadlines that you need to comply with as an investor carrying out a 1031 exchange. Number one, you have to identify the replacement property within 45 days after the sale of your replaced property, what we call the relinquished property. And
Okay.
that's deadline number one. Deadline number two is that you have to close on the purchase of your property within 180 days after the sale of the relinquished property. So those are
45 and
the two.
180.
Correct. So those are the two deadlines that you're working with. So you have a two-family in Boston that you want to sell, and you want to turn around and you want to defer those capital gains taxes. You identify a replacement property that could be a two-family, it could be a warehouse, it could be it could be any property that's held for investment or business purposes. And once you have those pieces in place, then you hire a qualified intermediary. They're going to, it has to be a written contract. There's certain rules that all qualified intermediaries have to comply with. But the QI is going to ensure that those 1031 deadlines are met. They're also going to ensure that that the rest of the 1031 code regulations are complied with. And also they're going to confirm that these properties that you're exchanging are qualified 1031 properties. And
Meaning what?
meaning that that they can't be a primary, it can't be, essentially it means it can't be a primary residence.
Oh,
And it has to be real estate. It can't be a primary residence, and it can't be a second home or a vacation home in
okay.
most cases.
But if I'm deciding I'm going to buy a warehouse, and you said, do I have to identify just one or several or?
Great question. So the vast majority, at least with the investors that I work with, the vast majority of investors exchange one property for another property. However, there really there is no requirement that 1031 does not require a one-for-one exchange. Very sometimes what you'll see is you will see people identify exchange several properties at a time. Now, of course, there are more moving parts there, which
Right.
is why you don't see that as often. But you could, for instance, you could sell that two-family that you were talking about, and you could turn around and use those proceeds to buy two other, say, multifamily properties. Okay. Now, what's important, one thing to keep in mind is the investor's goal when you're doing a 1031 exchange is to defer all of your capital gains on the property that you're selling. So there's really two requirements in order for that to happen, regardless of whether you're purchasing one or two or how many other properties that you're doing. Number one, the two requirements to defer 100% of the capital gains. Number one, the value of the property sold has to be greater. I'm sorry, the value of the properties purchased has to be greater than the value of the property sold. That's
To ensure that all the money's used.
to ensure that's all, well, Well, no, that's requirement number two.
Oh,
Um, and requirement number two is that all of the actual sale proceeds has to be used in the purchase. So you could think of a scenario where you are buying a property that costs more, where it has a higher purchase price than the sale price. But unless you use all of the sale proceeds from the relinquished property and into the purchase property, you're not going to be able to defer 100%. So sometimes what will happen is an investor will find a really good deal on on a property that they want to purchase. However, the property that they're purchasing does cost less than the property that they're selling. So they can still use all of the sale proceeds. Well, they probably won't be able to use all the sale proceeds, and that's going to cause problems. So there is going to be a portion of those sale proceeds that are probably going to be exposed to capital gains taxes. You're going to have to pay capital gains taxes on it because the purchase property is costing less than than the sale price of the sold property. So that's a situation, and that excess money that's not being used in the exchange is called a boot, BOOT. And a boot, if you're an 1031 investor, a boot is not a good thing. That means that there is proceeds from the sale of your 1031 sold property that you're going to end up being taxed on.
if you're selling a property for $1.5 million and you can invest all of it in a couple of properties to the tune of like 1.25, and you're taxed on another quarter.
Yeah. So in a situation like that, uh, so if you sell a property for 1.5 mil and you turn around and buy another property for 1 mil or 1.25 mil, you're going to end up paying a tax on a portion of the gain on the sold property
Right.
because the requirement wasn't met. Number one, you're probably not going to be able to invest all of the proceeds from the sold property to new property because it's a lower price point.
Now,
And
aside from being taxed, is there a penalty that's attached to that
no, it's
for
just
not
taxes.
meeting the?
It's just no. You're going to pay tax. You're going to pay capital gains tax on investment income, just
Right,
as you would any other type of investment, whether
right.
it's
But you know how the
stocks and
feds like
bonds
to
and securities.
spank you if you're not
Yeah, yeah,
taking
yes,
advantage of everything, and you say
yes,
you're going to, but then you don't.
correct.
So,
Yep. So no, because and by the way, this is another valuable uh, resource of the qualified intermediary, the QI. The QI can help because because 1031 exchanges is something that a QI does basically every day. They can sit down and look at the properties that that you're proposing to exchange and give you an idea of what you'd be looking at in terms of capital gains tax being paid. If you're doing it right and you're checking the boxes and you're purchasing a property at a much higher price point than the one that you're selling, and you're rolling over all of your sale proceeds into the new property, then your QI is going to say you're all set, no capital gains. But if both of those tests aren't met, then your qualified intermediary, your QI is going to sit down with you and say, there's going to be a boot here. You're going to have a tax due. Now, if the properties are close, it could be a small boot and it could be a significant boot, depending on the disparity between the price points of those transactions. But a qualified intermediary really, as I said, is the ringmaster in the transaction.
okay, they're the ones that are cracking the whip, making sure that you're out there finding your properties and.
Absolutely, and it's really important, Jim, that you get a good QI. And there are some major companies out there. There are significant companies, um, as with all things real estate or many things real estate. my recommendation, if you're an investor out there and you're thinking about engaging in a 1031 exchange for the first time, certainly do some online research. But my recommendation is, what they say with the expression, it's all all real estate is local. To sort of paraphrase Tip O'Neill back in the day when he said all politics is local. All real estate is local, meaning use a personal referral to find a good local Q&I. I have a couple guys that I work with, one in particular that I refer a lot of my clients to, and they have had great success. So that's really important. And there's also, you're looking, they don't all charge the same either. Generally, it's not going to be, the fee of a QI is not going to be a break the bank line item in your real estate transactions. But, that's a factor and something that you want to look at. But they're all going to be within a range. My recommendation in choosing a QI is you really find somebody that that has been vouched for by somebody that you know and trust, and somebody that does it all
So it
the
has a
time
track record.
and has a good track record. Thank you.
Okay. Now, I think this is actually from from your webinar that I attended a couple of months back. There's a listing agent. My seller is told me he wants to do a 1031 exchange. What disclosures do I have to put in to the list MLS to notify the buyers?
So in terms of MLS, I would. I'm not sure what and if there's an actual MLS requirement. It's not a bad idea to put it in there, and it shouldn't. By the way, I would, you could simply include, even though I'm a licensed broker, as a real estate attorney, I'm not a practicing one, so I don't complete the MLS forms too often. But in the remarks section somewhere, it's not a bad idea to just indicate in the MLS that the sale is or could be part of a 1031 exchange. That shouldn't scare anybody off, but it's not a bad idea to do it. I would also recommend that listing agents mention that, include that in the comments in the offer sheet. So when the buyer does submit an offer that is acceptable to the seller, I would recommend that, just so that everybody is aware of it and it's on the same page, that the the listing agent or the seller add language to the offer sheet that the sale is part of a 1031 exchange. Again, that shouldn't scare anybody off.
Right. Now, is that to notify them that the dates that are going to be included in the purchase and sale, they might be elastic? They might go out and they might come in a little bit, or what is the purpose?
Well, that's whether the seller wants flexibility on the closing date. I think that's going to have to be an independent discussion that occurs with the buyer side. In terms of meeting the 1031 deadline, no, that's a conversation that's really needs to take place between the seller investor and their qualified intermediary. Hopefully, the seller has already identified a property or properties that they're going that they're targeting for as the replacement property or properties. But the reason you put that in there is for a couple of reasons. Number one, the buyer is going to be asked to acknowledge in the purchase and sale agreement, probably, because most attorneys are going to want that language in the purchase and sale agreement. And so typically you're going to see the seller's attorney representing the investor. Seller's attorney is going to include language in the purchase and sale agreement that says that the buyer understands that the sale is part of a 1031 exchange, and that the qualified intermediary will ask the parties to sign a document indicating, disclosing as such, and furthermore, that the seller is assigning their rights, but not the obligations, their rights in the purchase and sale agreement. That is important, and that's really the key feature and what the buyer needs to be aware of. Now, this isn't going to impact the transaction from the buyer's perspective at all. It just means that the buyer is going to have to sign a disclosure acknowledging that the transaction is part of a 1031 exchange. It's not going to in any other way impact the transaction because the seller needs to do their homework with their qualified intermediary to make sure that they have a property lined up and that they're formally going to identify that property within 45 days after the closing on the sale of the property. So why is that important? Why is it important that that the buyer acknowledge that the rights in the purchase and sale agreement are being assigned from the seller to the QI? Well, that's because the Internal Revenue Code 1031 requires that those sale proceeds be handled in a certain way. And if they're not handled in a certain way, that means that the 1031 exchange is going to fail and the seller investor is not going to be able to take advantage of the tax deferment features. So, which is probably a good point, Jim, to explain how sort of follow the money, what happens to the sale proceeds in a 1031 exchange. And this is really a key feature. Go ahead.
Who's signing the P&S?
So the seller's going to sign the P&S. Okay. However, there is also going to be that language that I mentioned that the parties understand that the transaction is part of the sale that the parties acknowledge that the sale is part of a 1031 exchange. But and there's going to be language in there that there isn't going to be any separate assignment document per se. However, except as between the seller investor and the QI, there'll be separate documents that the seller will sign and a 1031 exchange agreement between the seller investor and the QI that of course the buyer or the buy side will never see. But it's in those documents that the rights are in the purchase and sale agreement are formally assigned from the seller to the QI. So the buyer just needs to be made aware of that, Jim, that's what's going on in the background. And the buyer's attorney who's handling the closing also needs to be made aware, because that attorney isn't wiring isn't wiring the sale proceeds to the seller or the seller's attorney. The closing attorney is wiring those sale proceeds to the QI, and that's important.
What if they make a mistake and put in the seller attorney's email address instead of the QI's email address to get those funds? Does that totally negate the transfer, the 1031?
So, first of all,
funds to be transferred.
It could. However,
Maybe.
First of all, suffice to say, if you have a good QI and the seller investor has a good attorney, that's never going to happen, because the seller's attorney and the QI are going to make sure that they have the wire instructions, the wire information that the closing attorney needs to wire those funds to the QI and not the seller's attorney. So that closing attorney, Jim, is going to be reminded several times in the transaction about where those sale proceeds are going, even if that closing attorney has never been involved in a 1031 exchange. So that's a very small risk in the scheme of things. However, if a mistake like that did happen, that could possibly invalidate the 1031 exchange. It's not going to invalidate the sale, because the sale is going to close as scheduled. But you really want to make sure that something like that doesn't happen, because the IRS, the regulations are very strict.
Right. Right. Okay, Tim, you've got things to do this afternoon. Is there anything that I neglected to ask you regarding 1031s that you I just totally overlooked?
Um, Jim, I think we covered the basics. We covered the basics.
Yep.
I would say my general advice in these things is it's always about number one, doing your homework, plan ahead, and hire good people. If you do that, and really that's sort of my catch-all advice in any type of real estate transaction. And it's all about hiring good people. So if, for instance, if I have a client who is an investor and who comes to me and says, Tim, I'm looking to sell. In fact, I'll give you an example. I just had a client who owned a business in Western Mass and wanted to sell the business, the building. Actually, they wanted to keep the business, but they wanted to sell the building uh, to an investor and remain as a business tenant in the building in Western Mass, and then turn around and use those proceeds from the sale of that real estate and buy a vacation home down the Cape. Now, it's to be held as an investment property. So in that case, that person did everything they were supposed to do and they did it right. Why? They did was, first of all, they crunched the numbers. They figured, well, that's the second thing they did. The first thing they did was they identified a replacement property. So they step one, wrap your arms around both transactions, look at the numbers, and then once you have a general sense that you're going to be able to make it work, step two is hire a qualified intermediary. So that's really the approach that you want to take. Number one, do your homework, look globally at the transactions, crunch the numbers, make sure you know that it works. Talk then, step two, I guess we're on step three, hire a good qualified intermediary who can really sit down and look at the numbers with you. And then like anything else, hire a good agent and hire a good attorney to assist with the two transactions. And
Sound,
if you
sounds like
if you do those things, Jim, that's a recipe for success.
right. Sounds like sound advice. Sound advice. Well, Tim Vanderveen, thank you very much for coming on and talking about 1031 exchanges. Got a little more knowledge than I had when we started this show. Thank you very much. Tim, how can somebody reach you?
Best way to reach me is my email address, tim@timvanderveenlaw.com, but probably it's easier to write down our main phone number, which is 781-829-2003. We're located in Marshfield, but really our bread and butter territory that we cover, we represent clients. Well, as you say, Jim, you represent clients from Southie to Sagamore. So
Southie to say, there you go.
we cover a similar area. We really cover pretty much, we have clients all over Eastern Massachusetts. So,
Okay.
and that's it. But Jim, I want to thank you for having me on. This has been a lot of fun.
It has been fun. We'll think of something else to talk about a
I'm
little
sure
bit.
we will.
Okay, Tim, thank you very much.
Thanks, Jim. Appreciate it.